Good to have you on, Brady Brown. It'd be nice to have you at footy training, though, too. Let me just also, someone else is just requiring the link. Let's flick this through. But got some pretty cool stuff just to show you guys tonight. Something a little bit different. Let me just repost that link on the chat. Looking at some things. Actually, it's good that you're on here, Dom. So I realized what you meant with the with what you sent me.
Yep. I've got it on screenshot here as well, which is a bit clearer than what I've sent you. But if
can you actually post that in the group chat?
Sure.
That'd be great.
Yeah, mate.
Or is that, yeah, I might get you to do that because we're going to talk about it. I'm just looking for my own.
It's actually on the screenshot I've got. It's really good because it happened twice, and both times I actually traded. And yeah, that's why I screenshotted it. So it's really interesting to actually see it work live as well.
Which is super exciting because just sending a link out. Sorry. Yeah, and you, Steph, you'll love this too. Actually, it just sort of helps. And I've been trialing, as I said to you guys. As I said to you guys last week on the call, I've been test piloting other ways to trade, especially during this busier period, because the vast majority of people predominantly obviously work in their normal 9 to 5s or whatnot. Kids getting to bed, can't really trade until sort of after 6, after 7 p.m. So looking at different ways to, as the little putt goes past. Geez, that's loud. Put me off track. Yeah, different ways to trade. So I've been looking at the 5 minutes, something I've been working. Dom showed me some other ways. And I know that I initially, actually, when I first started doing pocket options trading, I was doing the 5 minute and I was getting results, but I enjoyed the between that 1 to 2 minute market, just because I could get in, get out. And I'd rather just not have as much liquidity sitting on the table for too long in case there was a reversal or something took place. But I've had a look at this, done some back testing, done a heap of demo testing. So there's a combination of what Dom had mentioned as well, but also just looking at the 5 minute time frame and just keeping our normal structure, our normal setup that we look for in terms of engulfing candle, doing that little retracement, and just placing on the 5 minutes now, just to take away that anxiety of, especially the one, it can be like up, down, up, down, up, down, up, down. And I just want to sort of develop that sort of gambling addiction, which I don't want that feeling to take place. I found that when I'm doing this with the 5 minute, and I did a heat today in between clients just to see, and they all hit, which was really cool. But what I'll actually get you to do first, I'll repost this on the chat as well, just because we can all see it. Where is that? So last week I didn't actually reply, and everyone got a little bit into everyone replied. Nada, thank you, man, as well, mate, for replying to my post that I did up. So I'm just going to re-forward this back into the chat. And sorry for replay viewers. If you can't see this, you'll have to go back to make sure, open up HFX chat, and I will reshare it. And I want us to talk about this. Now, also, side note, my account got a bit spasmed. Here it comes. My account I was letting someone who's just struggling financially, I'll let them just use my account until they were able to afford their own subscription. Don't recommend doing that if they're in a different state, because I actually got locked out because it was different IP addresses from different areas. And I am very sensitive with that stuff. They just really want to nip that in the butt. So I got my account temporarily disabled in terms of my IM account. So I couldn't use Liquidity. So that's why I didn't have any screenshots up and ready like what Danny did last week, which I thought would have been really cool. So I do apologize for that. But that one that I've just posted in now, we can sort of, a few people had a crack at it. Now I traded this particular trade twice. So I know I'm backtracking a little bit. So I'm just going some over refreshes over the 1 minute, what I normally do. So I traded it twice. Now there's two very key areas. Now I'm just showing you that for reinforcement. Now I know, Nate, I think pretty much you hit it on the head with what we were looking at with one. Yes, Allison. Yes, actually, so if we combine the two, so Allison's was really good. So if you just scroll up a little bit, you'll see Allison, who has the 2 screenshots with the yellow on it. So that was the first one. So that was the second trade that I took place, right? So the second trade there, you can see was the equal high, the high. That's where it was coming from. So I knew.
Is this on your screen, Dom? Sorry, mate. I'm not seeing it.
It's on the HFX. Are you in the HFX chat, by the way? Have I got you on Facebook yet?
No.
Can you, I remember I asked you to add me on Facebook. That was ages ago. We obviously didn't. I thought you added me. That's my fault.
On Facebook?
Yeah.
I'm gonna do it now.
Yeah, can you do that while I'm talking, and then you'll know what we're talking about. Everyone else is in. I know Brad's in. Hey Adam, mate, I hope you're doing well, brother. So we're just talking about the HFX chat right now. That's why I reposted. So just to backtrack for the guys, obviously Liam, I know you just jumped on as well, but if you're looking at the HFX chat, I reposted a photo. So this is one, I was going to have a test from tests up here, but I reposted this photo, and this was an entry that I entered in twice, and I wanted you guys to analyze and see where I entered in on 2 occasions, and I did buy and I did sell, right? So you just added me then, now, haven't you?
I've just requested you. Yeah.
Awesome. I'll just flick you into the group now. Through one, not seeing notifications, confirm. Awesome. Sorry guys for the backtracking.
Sorry, mate.
No, I just thought it made sense why you messaged me saying, why is Zoom not working? I realized you're not in the group. So yeah, just so when I run, we'll push it back 15 minutes. So the call starts at 8:15 or 9:15 your time up that way, or you're 8:15, you're my time.
Yeah.
I'm just going to add you into this now. Cool. All right, you'll be added right now into that one. Okay, so yes, just basing off. Oop, I can hear some background. Who was that? Just you. I might have to just mute you, Dom. I can hear myself. Sorry. So yeah, going off Allison's one. Basically, Nader hit the nail on the head, and Allison hit the nail on the head of my 2. Well, being that secondary entry point. So looking at Allison's, there was that high, right? So you had the high that was, half an hour ago based on that 1 minute or thereabouts. And I knew that price action. Now, when I was watching this, that was the second one that I did. And so because I was already in this, I traded this pair twice, did my 2 trades. I was done because I profited my 3K and I was out. So I knew that price was going to come up and take those highs. Now I needed to watch. Now you don't just get in initially straight away on that blue candle that's coming up, on that yellow candle that comes up to take the other yellow candle. I had to wait and be patient on what was going to happen and how the market was going to react after it. Now I was watching the yellow candle and it come up, it took the high and then it wicked back down, had a tight, you can't quite see where she's marking, but there's a little bit of a yellow wick, right? And then I watched the next one come take place, massive engulfing candle. Then what happened on the second blue down, which is in the top yellow circle, you had a slight retracement. It wasn't that 50% golden area, but I watched it came up once, pushed down, came up a second time, went a little bit further, came down. I pretty much bought straight away. Just below that wick is where, I sold straight away at that point. And as you can see, massive roll off. Now that was a 1.5 minute trade, and that one was cleared for ages, right? So that is really good to make sure that whenever you're looking at the charts, you need to look left to get right. So understand, is the price heading towards a previous high? Is there something that it needs to go towards? Because if you see a fake out, what I'll often see from a lot of people when they send me some charts is they see that engulfing candle at the top of a Bollinger Band, but they forget to look left and know there's a little bit more room to grow for an area of high. So they get in on that one and then they get faked out because that was just a little fake out and draw some more liquidity just to go up to take that high. So just be aware of that. And sometimes you might need to zoom out a little bit depending on where it is. That's where the 5 minute comes into play really good as well, just to be able to see. Now, who can sort of work out, probably pretty obvious, but who can see where the buying opportunity was? Now, it wasn't an engulfing candle, but anyone want to mute themselves and see where the buying opportunity was on that same photo? Because no one mentioned the buy. Everyone mentioned the sell. And by everyone, I mean a couple of us. Nate, I know you're there. Do you reckon you can see where the buy was?
Yeah, man. Can you hear me? I've got a new computer set up, so I don't know whether you can
No,
hear
you're
me.
right. Don't stress, mate.
Yeah, sweet. Yeah, that buy was with those 2 double wicks down the bottom.
Yeah.
Of bullish and bearish candle, just where it broke the Bollinger Band there. And yeah, we had a crossover the Scotch, and again, where that volume almost reached its peak as well and started to return. Yeah, it's not, as I said, it's not quite to the 50%, but still the move still went up, didn't it? So yeah.
Yeah, so that one literally, it basically didn't even really retrace at all. So for the ones that aren't aware what we're looking at, in case you're at all confused, if we're still looking at Allison's yellow photo, just to keep it concise, so then we know. And for those obviously at the bottom there, we can see, I know this is in reverse. I think it's in reverse. It's reverse for me. The 2 double wicks, which just shows price exhaustion. But we can see a fake out took place. So we saw that there was a wick here and a wick here. But if you have a look, that this is actually a higher wick. So this was basically a fake out to the downside, it continued its downward move. And I know it doesn't show there, but there was actually here to the back, I didn't get it in the photo, was a higher low. So because that's how I also knew we we're going to come and take that higher. So what I mean by that is the previous low to that price action to the left was higher than this low. And I saw those rejection wicks, and we reacted off the IC candle, the institutional candle from that previous low. I'll show you some examples of that live if I can see some, but I just wanted to bring that up because I showed that earlier. And obviously the indicators, as we know, oversold, overbought, the same. That's just bread and butter. At the end of the day, candle market structure always wins out. Oh, actually, Alison did put up there. I just realized she circled it. She did. So she did both, which is awesome. Coolies. So I'll get on here and share my screen now. So what I want to, and I know some of us are all different levels. Some have just started, like obviously Liam, you just started, man. But some of the stuff you've been sending me, bro, is just epic, by the way, epic. Okay. So if we have a look, we even just now, I just jumped on a CAD JPY. I literally haven't looked at it yet. You can see massive 2 rejection of wicks. So if we were to see this play out, now this is on the, if I change to the 5 minute, yes. So I've just been doing something else just to try to look at some more different ways that for the ones that have just jumped on now, I've been test piloting different ways to trade in the evening times, because that's the vast majority of people that are trading. Now, if we have a look what's happened here, right, when we look left to get right, we can see what these wicks have come down to do. Yes, it's price exhaustion, but we haven't seen that real upward momentum yet. But who can tell me what these 2 wicks have done? Now, this is more smart money. I don't want Nate, I don't want you to answer it. I want to see if anyone else who can answer this. Now, it doesn't matter because we're all different stages, but this is what's called like a liquidity sweep candle. So it's like basically like an FU candle. So what that's done is pushed down and took all these lows. So swiped all the liquidity here. These are smart money concepts. So what I'm going to be talking to you about is a bit more in depth, but don't stress. Just essentially understand that price doesn't just move up and down like willy-nilly. It needs to essentially, there is accumulation, reaccumulation, distribution, and redistribution. So accumulate, obviously it's accumulating, right? It's accumulating price. So we can see that price went sideways. So it's enticing more people into the market, enticing. So what's going to happen here when it just goes sideways is you get buyers, sellers, right? And then it's going to eventually make its move up. And what happens is, say, for example, here, they had a lot of people thinking they was going to sell. So have their stop orders. So their pending orders here. So this is where their stop losses are. It doesn't happen in this form of trading, but remember, we're still trading the normal markets. So this still happens in traditional markets. So people have got their stop losses here, which is like a safety net on their order. So if price goes above here, they get stopped out. But in the big institutions, when that happens, they've got to buy back in their orders, right? Especially like a short squeeze or a long squeeze, whatever the opposite one is, I forget. So now prices come up, it's taken all that liquidity, then people have been stopped out. So they've got to buy back their positions, which forces price up, right? But what happens is there's still all this resting liquidity under here, and it has to return to these areas. And we can see actually as well, although it didn't quite get there, is this is an IC candle, the last down before the up, which broke structure. So this is an area of interest where I can see price coming back to this big blue candle right here. So what that wicks have done, come down and just taken that liquidity. Now, I know that's from a different form of smart money concept trading, but just be aware, look left, understand where's some areas of price wanting to come back to, because that's going to help indicate for you what we're looking for. And are we bullish? Are we bearish? Just so we know where to trade. Hang on, I'm just seeing if there's... No, sorry, all good. I was wondering what that was. Now, so with this, this is why we sort of don't react straight away, because even we've seen the rejection of wicks 1, 2, if you'd gotten in for a buy here, you technically, depending on what time you got in, you might be just at break even. So we just want to see how things take place. Now that we can see that move now, and we've got imbalance to the upside, this would be an awesome opportunity for getting in for that long-term buy. But, I've been talking and I wouldn't be doing it right now. So so just to backtrack, I know I'm sorry, I'm going a little bit all over the place because I've been doing so many different things and I'm frazzled because I just walked through the door. But what I've been looking at is basically trading off the 5 minutes. So on here, when you click this button, instead of looking at the 1 minute, we're looking at the 5 minutes. Now, this is just another basically alternative to try and to test pilot on your trading, on your demo account, to see if you like it, see if it's something that you might like. I've only spent, like I said, 1 day doing it. So I would like to do a bit more test piloting, and I'll get back to you by next week. And I suggest you guys do some of the same as well, just to see if you find it of an interest for yourself. So just for the sake of now, I'm just going to get rid of all the crappy paying pairs. And yeah, sorry to throw like another curveball if you're just sort of learning this concept, but the methodologies are still the same. All that's happening is we're looking at a 5-minute time frame. So it's 5 minutes for each candle. So nothing else changes. We still look for that engulfing candle, piercing the Bollinger Band, you know, moving down. But the thing that I wanted to mention today, which is what Dom and I have been speaking about, and that is that looking at what we call, that's not really quite it, but if we use this as an example, right? When things are oversold or overbought, and we create basically 3 waves, 3 tiered momentums in the overbought or oversold conditions, what tends to happen is on the 3rd one, we get the fall away. So this isn't a prime example. It's pretty close, but just say, for example, say we had that first wave, come down, bounce off, another wave, come down, bounce off, then a 3rd one. It doesn't have to necessarily bounce. It doesn't need to be like really nice and clean. Like this is pretty close. Then we can sort of see, like, so we came down, came up, there's a little downward move, then it's come up again, got the crossover in the stochastic, right? And then you have the fall away, right? So that's what we can see here. And, you know, in reality, because it's on the 5-minute, we don't want to just rely on that. But when we see the 3 bounces, okay, awesome. We be aware that now on the 3rd one, we wait, we be patient. We still see the engulfing candle. There it is there. All right. Plus we had, that was just a shit doji candle, but the engulfing candle, there's your little retracement to just under 50%. You get in for a sell, and, you know, you've had 10 minutes. No, that's 5 minutes, isn't it? So that's almost an hour. I mean, half an hour worth of downwards cleared by a mile, right? So that one is what we're looking at. So I want you to be aware of that, and in doing your back testing, seeing this take place. And if you can see it happen live, it's not really a good one. Not really a good one. Now, being aware of this one, obviously we are dealing with 5 minutes, and because we want to see those 3 bounces, it's going to take a little bit longer to take place. So this is something that it's not as quick as your other way. But if the success, it seems to be a hell of a lot better, especially dealing with a 5, then in reality it shouldn't matter, because if you're doing 20 trades at the 1 minute and you're only getting sort of 50% right, obviously you're not really going to profit as much as if you just wait a little bit longer and spend that time. There's a big liquidity sweep there. That was huge.
Hey, Dom.
I'm coming back. Yeah. Yep. I can hear.
Hey, there's a good example actually on Liberty now. CAD JPY on the 5-minute. If you head to 2100, there's a really good example of that 3, mate.
Yep.
On the 5-minute.
This will happen, guys, if you stay. What I've noticed as well, I did it today because I was doing a bit back and forth. If this comes up, just refresh, because I think if this lays dormant inactive for like, I think I found for about, because I'm now dealing on the 5-minute. So today it was laying dormant for a lot longer when I was waiting for a setup. I found that the search criteria sometimes wasn't there. So just refresh every time. A little bit annoying, I know. They're also going through major updates on the whole, not just Liberty, but this whole sector of IM, the strategy section, because what's going to be happening now is rolling out into the new year, which is really exciting. They're going to have a platform on here where you can actually trade and do everything just on this one platform. You don't need to go anywhere. We're going to have a whole in-house brokerage account. You can do basically become like MT4, but within IM Academy. So I do know they're doing a lot of background stuff, which is wouldn't surprise me. And they did say expect there could be some little JPY. Now, Dom, did you say that?
Yeah, CAD JPY on the 5-minute.
And you mean for this same setup with the
Yeah, there's a pretty good example here. It actually looks a lot better clean on Liberty.
Yeah, I was gonna load it. It was just what is going on?
Yeah, mine was doing that as well.
This has never been this bad. I'm going to send support an email about this because, well, now that you've said it, I've never seen it being like this. I've normally once, and that's fine.
I had the same issue with this last 2 days as well.
Had the same issue.
Have you? Yeah.
Yeah.
There you go.
I thought it was just maybe my Mac or something, but yeah.
Yeah, so I've had issues with it last couple of days too. So
Yeah, well, that makes sense. All that is, and I haven't traded for the last couple of days, so I haven't seen it. So that makes sense. I'll send them.
All right. So just back test to 2100.
21. I'm looking at the 5 minute 2100. Do you have as in of from yesterday, 2100?
Yeah, from the first. Yep.
And you're looking at hang on. You were looking at which strategy were you looking at?
Number 2.
Simple scalper, the first one.
Yeah, and then I've stuck in a stochastic in there as well. Yeah, so put a stochastic RSI in there at the bottom. So 2.0.
There you go. So what we're looking at here is obviously the
yeah, so flick to 2.0 on the strategies.
oh, it's had on that on there. Oh, you put the stochastic onto your 2.0.
Yep. That's it. Now stick on the stochastic RSI on your indicators. So then you've got 3 indicators.
I don't know why that it's not stopped. Why it's still on there? That's a little bit annoying. Why that came off.
All right, back to 2100 there. Now see, it does come in and out of the bands, but see, that's a really good example of it, that 3 waves, and then you have that sell-off.
Yeah, okay, I see.
So looking on the 15-minute, it equates to being overbought as well. And so we come in and out for those 3 lots, 5 minutes, and then it comes down and it has that big sell.
Which is, if I'm looking at that, this is why, like, I guess, and I do like this as an alternative, but if I'm seeing this live, I'm looking to make my entry. Look, it's going to clear 100%, but obviously we're taught to look at making the entry as we're starting. So obviously we saw the swap over in the lines, which means generally means a reversal is taking place because obviously just for those who aren't aware of what we're looking at, the blue line obviously coincides with the blue up candles here. So that means we've got uppish bearish, uppish bullish momentum. And the bigger the gap between the lines means the bigger the move generally, the bigger the momentum. And when there is a crossover, like what we had here, they call that the cross, is when obviously reversal is supposed to take place. And then the same thing to the downside. And as you can see here, the lines are touching again. So that's why it just really went sideways. Now, it's obviously not the coolest of setups. There's probably a little bit better of a way to be able to see what we're looking at, in the sense that as Dom said, we didn't hit the Bollinger Bands, but if we're going off this, you obviously want to be going off this retracement candle. That wasn't a full engulfing candle. It's pretty close, I guess. Like it's not bigger, but it's virtually the same size. But yeah, if you've basically seen this, looking at our new little thing that they're talking about, Evan's talking about with the three peaks, then we had the retracement candle from the pretty much engulfing candle and then fall away, obviously doing a 5-minute trade. If you'd gotten on that, you would have cleared that by a country mile as well. I do like that one. I do like that one a lot as well. So that's cool. That's something just to keep on a look for. It just, if you happen to be trading and you see this happening live, this is something I wanted to bring to your attention, guys, and take note. So anyway, enough with all that. Let's see and aim stuff don't feel, whoa, you guys just asking a question. I'm nervous. Like there's no stupid question. Sorry, I know the internet's a little bit crappy. Another reason why I don't live trade at this time, because my computer is just so slow trying to run screen record. It's just too maggoty. But I'm happy to do the demo trades. Hopefully at your end, guys, it's nowhere near as slow. It shouldn't be if you're just watching. What's going on here? you guys have like stopped at your end. Oh, if you can see my screen. If anyone sees a setup who happens to be looking at stuff right now, just let me know because I just had to relog in. So looking at this at the 5 minute obviously ran. So this was back at, so CAD JPY, the one that we were watching. So if for those who have still got CAD JPY, because I just happen to have Liberty open in the background, you can see those 2 rejectional wicks, which was awesome. The next one, it's not really healthy price action. So to sort of give you an idea, I still would have traded this. But you know, what I'd like to see is after that, so you had your first downward wick, which was the bearish one. I know I'm not sharing the screen. I just wanted to reload Zoom properly. Not reload Zoom, stop the screen share because it was just bugging out on me. So just from here, obviously looking at the 5 minutes on Liberty. So, you know, what I like to see for these rejectional wick style forms of trades is obviously the down 1, 2, and then this being a bullish engulfing candle, making sure that it's bigger. Yes, it's technically bigger, but it's not a full like enclosed candle like this. If we saw this candle here, that for me is awesome. Like I'm going with that. I'm going for the buy. But even that though, with this, I'd still get in just based on what I said before. Just seeing enough of that movement take place, you know, because everything else was in alignment. And Dom asked me a question as well about trading off the EMA. So that's the middle line. And I have, and I do as well, but it's just about understanding what kind of market that we're currently in. Are we bullish or bearish, or are we consolidating? So obviously consolidating markets just going sideways, I won't do it and if the Bollinger Bands are tight together, I won't do it because it's just too close together. But if we get a big spread in the Bollinger Bands, right, and you start to see that gap forming, this means that there's going to be a big movement taking place. So that's a bit of a cheat sheet to sort of give you an understanding that there is going to be some big moves. So like you look at now how wide the Bollinger Bands are, this means that it's going to come up. Right, and it's going to come up quite aggressively. So that was another indicator for me as well for this particular one for a buy, because we had the liquidity sweep, we had the rejectional wicks, not super clean afterwards, but still enough to get in for a buy on that 5 minute, and that would have cleared. Well, let's click the candles away. Why did that do that? Why did I do that? Come back. Has that happened to anyone before? Can't say I've ever seen that happen.
I was telling you yesterday about the candles printing way outside as well.
Yeah, so that was the gap. So that's just getting new to trading and not understanding gaps. So what happens is in the market, there's certain pauses during the day. So obviously when market closes on a Friday, Saturday, whatever the day that it closes, giving on our time zone, you'll have close. So say price is at $10, it closes at 5 o'clock, or our Saturday closes at Saturday morning, bang, price is at $10, right? Then what happens is people have pending orders sitting in there, ready to go. As soon as market open, right, it might be a huge bust to the upside or a huge sell-off, whatever it is, depending on what it is they've done, right? Then you'll have a discrepancy. So when market opens again, it might be sitting at $8, therefore leaving a gap. And that can happen during the days as well, because I think it's 7 o'clock, there's a market reset every morning, 7 o'clock, 8 o'clock, there's like a pause. So actually all live trading will cease. On pocket options, it'll turn all into OTC. And that's what that is. But that's really good. If I ever see a gap like what you sent me, Dom, in the market, then that has to be filled, and it will be filled. You just got to wait to see the movement take place and wait for your move, and you'll watch it and it'll get filled. I'll actually trade that all the time. Okay, so yeah, so like I said, does anyone see anything? Just so I can bring, it's just wicked houses on the computer as well, on the Wi-Fi. It's been real wiggy lately. Just going to try this one more time. I'm conscious of the time. We've got 10 minutes, so I just want to see if there's anything take place. So we've seen, that's reacted really well. What was that one that I just saw? I'm just refreshing it. My end. It just keeps spinning, everything's spinning. Come on, load. Sorry, team. Just going to take the Wi-Fi off my phone. This is the one here. So we had that reaction off that IC candle. So this is a really good one. I know it's back testing, and I do apologize that I can't sort of just see these live and call them to you live. I'll attempt to do that. But what I mean by IC candle, that just let this come up. Come on. So an IC candle, for those unaware, it's the last up before the down move, right? Generally the break structure, and also the last up, it's the last down before the up, which breaks structure. So this is really important to go with this method of trading, and especially as we start to deal with the higher time frames on the 5 minute, because that's when it becomes a little bit more important, because you're going to see those reactions. So what I mean by that is, if we're looking back to look, obviously look left to get right, there's little footprints, and as this move came all the way down, it left little random big, quite impulsive up candles before the downward move, right? Same here, up candles before the downward move. But the difference between this one and this one, this one here and this one here, okay, is that this wick came up and came into this candle, which means it's already mitigated out of. So price action already returned to that footprint. So we don't need to worry about it as much because it's already been mitigated out of. But this one here, which was the last up before the down move, right? This one here, which also left in balance, which means price action, this big blue candle in here, there's no wick that's really come up into it enough to fill that imbalance. So this needs to come back to that area, which is why price has come up and reacted, taken the liquidity on this one, filled, it's also shot up a little bit more, but filled that imbalance, mitigated out of the institutional candle. So it's done multiple things, which is why it's how the price moves. We just look for those, and it just goes from one of those to one of those to one of those to one of those. And then it's had its reaction down. So if I can get an IC candle area that also coincides with my normal pocket option structure of hitting the Bollinger Bands and getting that reaction from big engulfing candle, there's your little retracement there to 50%, just almost. Get in for a 5 minute trade, clear off. That's it. Awesome. That's our money. So I know that's going to go over some people's head because it's a bit more advanced, but that is awesome. That's what we're looking for. Now we've obviously flipped, we've flipped bullish. And if we're looking into the downside as well, we have a look, it's done the same thing here, right? The last down candle, the last down candle before the up move. Now it's only minimal, but this move did come up and break this high, right? So this high here is ever so slightly higher than this high. So what that means is that this becomes our institutional candle, and price needs to return back to this. It did kind of mitigate out of, which is a little bit rare in the sense that you don't normally see it come back, but I still watch it. It's still an area of interest. And that's why we had this candle come here. And if you look, it's come basically to the smack bang open, return to that area, and then it's run off and gave you another chance for an opportunity there. So just be aware of those. And when you're back testing, and have a look. And so before I even make a trade, I just like to come back and have a squiz what's happening. Like you look there, we had 2 equal lows right here, 2 equal lows. That's liquidity. We had this massive wick come down, which captured those lows. And now we've had the reaction to the upside. So I know here, I need to watch this space and look in, I wouldn't have necessarily gotten in on that massive wick in terms of going in for a sell, but just watch and be aware and see things take place, right? And we actually took 3, look at 3 equal lows, 1, 2, 3, and a 4th one here. So 1, 2, 3, 4. So that's what that big wick was. It's come down and taken all those lows. So if I saw that many lows, and then seeing that rejection come off, I probably would have actually got in for a buy there. Okay, let's see if something's in our, something else went past. Let's see if something's in our buying opportunity. That was Euro JPY, which is the same as CAD JPY. So they did the same thing. So that's one thing you be aware is like Euro JPY, CAD JPY, you'll have similar movements. So remember, for those who can't remember, I did put it in the group. I'll put in here the cheat sheet thing about some pairs obviously correlate. So if I'm trading one pair, you get correlations like AUD USD and ZD USD. Obviously, Australia, New Zealand, when they both trade the Aussie dollar, the USD dollar, they tend to move similar. Okay, so you can see one set up in one. So I'll tend to watch the other one and try to get in 2 pairs there as well. Sweet. So that's already obviously ran. That one's obviously already ran, but I'm just looking back just to see what's happening as well. Nope. Nothing's in our area of interest.
Hey, Don. Mate.
Yep.
Where do we learn about what you just said about equal lows?
That's honestly, it's just like, it's a smart money concept, but it's just something I want you to be aware of. Like if you can visually see 2 candles at the same point, then that's equal lows. So that means there's pending orders there, and that's where it needs to move towards. So just be like cognitively aware while looking back by back testing and seeing where those areas are, because they're just target points where market needs to move to. Your institutional areas and your equal lows, which is your liquidity areas. That's the other form of trading, which is basically what I know Steph's done a little bit of it, and Nader's obviously doing it as well. And I did. That's the first way I learned how to trade. That's the smart money concept way, which is part of the reason why I was able to pick up this form of trading a lot faster, because I already understood how markets move. It just takes a lot longer to understand those principles and train your eye. Like honestly, it takes 4 to 6 months, and a lot of people don't have that money to learn how to trade in terms of costing of admin fees, blah blah blah. So that's where I learned this concept, because you can make money a lot faster. And if I can at least show someone to cover the cost of their admin fees and then progress to learn the other form of trading, and that's something that I really strongly suggest. And I know I'll get SJ on when she's feeling better to talk about that, because combining the two together, which is what I do, it's really powerful stuff. Like for example here, another 2 equal lows. What am I looking at now? I'm looking at another JPY, GPP, JPY. So look, all those JPY pairs that I just spoke about all have those same 2 wicks to the downside. Wick, boom, boom. So if I was watching that, right, I would have traded all 3 of them to have them in my awareness. CAD JPY, Euro JPY. Have a look. Double wick. Loading, double wick, and then that was this one. Double wick, all did the same thing. Took liquidity, took equal lows. This didn't go as low because there's that liquidity from the other one, but they're still, everything is, they're similar. So bang, bang, bang. I would have traded all of them for 5-minute trades, all setups, because they all ran and bounced off. And if you have a look, they're all obviously reacting off the EMA. So we're looking at this now, another setup. So we can see price is almost at the build up. We've got an engulfing candle. We had 3 wicks to the upside, 1, 2, 3. Do we have them in all 3 pairs? Oops, that was the wrong one. JPY. Shot up a little bit higher in Euro JPY, but you can still see the 3 weeks, but it's not as nice, not as clean, so I wouldn't do it. And we haven't quite got there in CAD JPY, but it's a little bit behind. So the fact that they're all probably not something where I'd be looking at. No, so you can have that reaction there. Anyway, it's just something to watch. So what I meant by off the JPY, off the EMA bands, so essentially seeing this, when you see the rejection a week, we oversold, do we have all the other indicators? Then this would assume and would indicate for me that we are going to have that reaction to the downside, and obviously getting in for a sell because it's basically rejected off. That's no longer our Bollinger Band. This has become our Bollinger Band top part. Let me just... What else is paying more? Let me just get rid of some of these first ones. So, because they're all sort of in the middle, and I want to do what we normally look for and not do these middle ones. It's always the case when at this time slot, they always tend to be like in the middle of the bands, especially now that we're dealing with the 5-minute time frame. Let me just look more. That's what I just looked at. Sorry, catch JPY, I already looked at. That already ran off. That's another JPY. It's in that same area. Euro CHF sitting in the middle.
I asked you the other day or whatever, I sent you that message. Is there a certain time that you try to trade in particular?
Yeah. So for me personally, with the way schedule and etc., I tend to trade between 2 and 6. Well, not now with footy training makes it hard, but say between 2 and say 5 at the latest. I've got a small little window. Sometimes I'll get a half an hour gap between clients where during say around that one between say 11 and 1, I'll get a little bit of a gap as well and do it. And then sometimes after this call, but as I said, I've just been practicing a 5-minute trade. Sorry, the internet's really crappy. That way we can. Because most of us are trading at night time, essentially, is what I'm trying to say. Sorry, brain fade. So yeah, that's where I tend to be the best point to trade.
So do you only trade at those times because it suits you, or that's when you prefer to actually trade due to what's going on in the price in the market?
Yeah, just because
what I was getting at.
So, sorry, for me, it just.
So if you had nothing else on, for the whole day, ideally, when would you trade?
Yeah, that's what I was asking.
Yeah, I still like that same time slot. The reason being, I guess, again, just because I'm used to it. So I'm used to how the market goes and how it flows. As I've said, at nighttime, the markets tend to be a hell of a lot more volatile because you've got London and New York open at the same time. Well, first you'll have New York open, then London starts to open. So a lot more liquidity is moving. So it moves a lot faster. So that's why I've told people to practice between the two, because some people react really quickly, but and some don't. Some don't react quickly. So therefore, a slower paced day market would be better for you. But if you're a quick reactor, then you shouldn't have any problem trading at night. The setups are still the same, but just what happens is you'll see a setup and it'll just go straight away at night, as opposed to daytime. You'll see it, the next candle comes and you just have a lot more time to react. So that would be, so to answer your question, it's probably yes, because I've traded.
I definitely get a lot more trades, right? I found like around when I finish work at 4:30 compared to like now at night. I don't know if that's why, just because it's easier to read or what the go is.
Move slower.
Yeah.
So that, and that's why we test on different times to see what you're like. You can see all these.
I've been going off 2-minute trades though. Like, what would you suggest is like the best time to learn to trade?
Here's one of your area of interest while we just watch this take place. So that's coming up now, guys, to sweep these highs. So we had all these highs here. The highs have been taken. Is there another area to the left that we need to be looking at? Where's our institutional area, the last up before the down? So in this one motion, right, we have high here, high here, high here. This was our last institutional move, the last up before the down that broke structure. So in this one candle, we will take that high, those highs, we'll take this high, and this has already been traded out of. So we have a nice step. Like, this was another institutional area, but because that wick's come up and filled that, that will be already mitigated out of. Is there any other area? We have, not really, not for ages, not till like up here, which is way too far to move. It's not going to jump that high. So seeing this take place, we can see that they've got the pullback, just a liquidity sweep. So if that's on AD and it's ZD. Sorry, Liam, ask that question again. I just cut you off.
Oh no, I just said that I've been doing the 2-minute trades, so I'm just wondering if there's a difference with the 5-minute trades. Like,
that's what you
is
said.
there like a better minute to trade on?
It's because I've left it I haven't been on it for a while. So that's what I was saying at the start of the call. So I've been test piling a different way at night just to counteract. So for me personally, between that 1.5 to 2 minutes during the day is what I found works well for me. But this method at night, I was doing like really short, like even shorter ones. But I'm looking for a different way that's a bit more suited for the nighttime movement of price. So that's why I've just been test piloting these 5-minute trades, and it seemed to work really quite well. And especially if Liberty is going to be a pain in the butt and we're not dealing on the 1 minute, we've got a little bit more time for the charts to actually load up. Here we go. So, right, and then that bloody Stochastic's gone away again. I'm still going to send admin an email because, oops, this one, not that one. Same anyway. I can't delete it. All right. So as you said, we had the liquidity sweeps taken off. Obviously, very oversold. I mean, very overbought. It's coming up. It's taken that. Just want to be patient and watch the next one go through. So this obviously, like I said, slower on the 5-minute. But we just want things to show. And this massive pullback wick is obviously really good. What I had been test piloting was basically, once I've seen this wick go, is basically selling off now for that 5-minute. And that was working quite well as well. So like I said, what I'm sharing with you guys, I've literally spent one day just trialing, still going off the same methods, but essentially seeing this wick now and going in for a sell once that candle is still closed, because I still want to see I still want to see it move, how it reacts. So I'm just going to test pilot both with you guys now. So we either do one of two things. You either basing on watching this wick start to fall down, so create a hot more of a wick, watch that candle close. and getting in straight away when we see it, or we, like what I have showed you before, is that full engulfing candle, then wait for the 50% retracement, or tends to be 20, 30%. I've noticed a lot lately, and then getting in for a sell. I also tried both, essentially, because it's a 5-minute trade, which allows a lot more time to move. I'm actually doing both. So selling off the reaction off the wick, and then selling off the re-entry price. So this theoretically, based on what I'm seeing, should be an engulfing candle. So my first trade should still pay off. Then there should be the re-entry point of the 50% retracement of this candle printing. And then I go in for another sell again, that's what I was doing this morning. I was finding it was this afternoon, just before I went to footy, and it worked. They was working, and I did about 5 trades. They all came off. So seeing what's happening here, everything's in line. We've got the gray print of the candle, which means price stagnation, but we're seeing the pullback. These are starting to fall down, both our stochastic. That's our stochastic there. This is a normal RSI. Both have crossed over. The trade's obviously well and truly up because we entered off the top here. And yeah, it coincides with everything. As I said, just looking left, took all those highs, top of the Bollinger Band, mitigated out of that IC candle, which was here. I can actually put the lines on here. I could do that. Where is my... So what I mean by the IC candle, the last up before the down, which is that one which broke structure, that also has not been mitigated out of, that's left in balance, right? That's our be all and end all, which is that candle right there, right? And we just want to see the reaction from it. So not only did that come up and take it out, but it actually took it and went even higher from it. That's the top of the wick there. So it actually took its liquidity as well. So yeah, that's a really good one. So now we just want to see. So this is what I've been demoing. So this trade, should theoretically, we've got 2 minutes left, theoretically clear. But if this doesn't engulf, then that will actually indicate to me that we're actually going to continue to go up. So that's why so with the first couple that I test pulled, in terms of waiting for that engulfing candle, because it didn't show, right? That's why I was like, well, let's get in on the initial reaction as long as it's taking highs and it is a big wick. That's one thing that needs to be shown, that there was price exhaustion. If this was a full candle close, I'm not doing the sell-off like I've done then, right? I need to see the rejection or wick, which shows that it was just a push up to capture liquidity and then come back down. So when I see that, I'm getting in for a sell, because otherwise I wasn't getting any of that initial. If I didn't do that trade like I've done now, I miss out on all of that, just waiting for an engulfing candle. So I'm basically just trying to be a little bit cheeky and get in twice if it presents. Now, if it doesn't present and it doesn't do an engulfing candle, well, then I'm not going to, and it doesn't have the retracement on the next one that's going to print, then at least I've still profited from that initial trade. So
what are you saying here is that if, like, so say you hadn't got in on the trade yet, on the next candle, if that does engulf and the next candle comes back 50%, then to get in for another sell, like for a sell.
Correct. Yes, that's exactly right. Now, what I've noticed though is it doesn't necessarily always go to 50%. It might only go to like 20, 30%. Doesn't matter.
Pullback of some sort, right? Yeah.
But what I want to see is, like, if we can watch this candle live now, and I'll watch it on pocket options as well. It's probably actually a bit better because for this particular what I'm looking at. So if we're watching this candle live and pretend that this was the retracement, it's a lot slower on the 5. But just if you watch my mouse, say you see this, boom, boom, and you can see that it's trying, but it's rejecting, trying, and it's rejecting, right? That shows to me that it's bouncing off it. Now, counteract that. So pretend now I've got a candle now that prints and it's coming up. So we're coming up to this. So now we can see it now. So we watch this, right? It's coming up. If I see this up, reject, up, reject, up, reject, that's enough confidence for me to just go. So I just want to watch it up, reject,
and then you sell already. Yeah.
And then, yeah, so watching that, I would see a little bit more. So that's already banging off a couple of times. So, I would rather have got that top one. And this is where you can split your entry as well, which I mentioned about before. Did I just do 1 minute? I didn't even trade. I did trade. Yeah. So that first one's got off. This one's there. What you can do as well is you can, if your amount, if you're like a little bit, if you know what your trade amount is, you can half it. So like, say for example, there, like it was going up, down. I didn't get my awesome one. I wanted to get up here with a bit of a yellow candle. Like, see now, if I'm still watching this now, and it does happen to go outside of my entry point, I can actually get a better entry point. So if it doesn't, or it might not, it might just continue to go. It doesn't matter. But this is one thing I've done. So therefore I'm getting, that was just a minute, didn't it? I just did a minute. I didn't do my 5 minutes. I didn't think so. So anyway, if we just pretend that we've done a 5-minute trade at this point, if it comes back to my area, I'll go in for another one and just show you. But I still think this is going to run anyway. So 5 minutes. Now, this is just sort of no. So see how I'm not winning the trade. So it's gone up a little bit further. I'll go in again for another one. Now I've got 2 trades, slightly different entry points. It just spreads. It spreads my entry, which is just I found to be also beneficial for just in case one doesn't pay off. You've got a couple there. So I know it's 10 past. I do apologize, but maybe we'll just wait this last 5 minutes and just see what this last candle price action does. So we got that retracement. It's not a huge one. Oops. What do we get in reality? Like it's up there now still 20, 30%. But that's why I was test piloting and making sure that we still do that initial one, that huge rejection or wick, if there's highs to the side. So as you saw, that first one I was able to profit off, because then if this next one comes and it just runs, right, you're able to still get in on it. Or if we end up coming up, it just means you've already essentially, if this wasn't, well, I guess it wasn't an engulfing candle. That's one thing that it didn't actually end up doing, did it? But I still see this as being a sell-off.
Is it because it just keeps rejecting going up that you're assuming it's going to sell? Like it doesn't want to push up?
And also our indicators are correlating. So
yeah, obviously, yeah, no, that as well.
I know it wasn't an engulfing candle, which isn't ideal. Engulfing would have been 100%, but you know, you're not going to always get your all indicators there. And because of, I just wanted to show you some live trades. The last couple of weeks have had shit price action. And we've got the stagnation. So with these colors, so this on Liquidity, which is the 2.0, this essentially means we had the bullish. So when they're full, that was strong bullish up momentum. Now, even though they're red candles, it is consolidating because this hasn't turned red yet. So price is basically going into a little bit of consolidation. Essentially the bearish momentum is starting to roll out, and we've got these both falling now into those areas, falling. Now, keeping in mind with my trades, because I only did a 1 minute trade, so where my initial trade would have been from was up here, and I only did a 1 minute. My 1 minute came off, but this is where I wanted it to be. But this is what I also like with the fact that we just extend our time frame a little bit because we're allowing the move to just take place, but it's going to. And yeah, targets to the downside. Like, what do we have here? We had that wick here, which sort of already came through and mitigated out of everything. That wick came to this little IC candle, which was it's interesting. So that's where that target was. So where would be another target to the downside? Or I think we're actually going to flip bullish, to be honest, based on that, because we've created a high. So I see this being our next area of interest to the downside, where it comes down and then reacts off to now flip its continued upward move. Never mind, that's just me talking out loud a little bit. Still sitting around my entry point in terms of the re-entry of not where I would have actually been in. Like I said, it would have been a bit higher, but these are going to be really annoyingly right on where I'm at.
So you're thinking that once this one comes down, you're thinking that it's going to come in line with that one over to the left there and then come back up again? Is that what you were just saying then off the?
Yes, that's what I was talking out loud. So essentially, what's the next institutional area? So the last down before the up move that broke structure, that took the highs, right? That took these. That is this area here. Yeah. So and it's imbalance. So there's no price action here. So I see this being our area where it needs to come back to and make a decision. Is it going to continue down or is it going to go up? Because we have a look at what happened to this week. This week here, there's a reason why it stopped there. Price doesn't just do whatever the fuck it wants. There has to be a reason for it, and there's going to be those reasons. So this week was here, and it's come down, and it's reacted off this institutional move, which broke the structure. So we look at, yes, this is an IC area, yes, but this already had returned to it. That big blue one came to the exact open of that one, right? So back here. That's a bit of a reaction there, isn't it? So looking off of that, because initially, remember, I've gone in off re-entries. So where my initial one was up here, and it's come to the fucking break even. Like that was on the extra point when I did the 1 minute trade where I actually entered off the one. That would have cleared. Like it's super close. It's not ideal, but that would have my initial one. If I'm doing my live trade without you guys, I'm hitting off here for a sell, and that clears easily within 5 minutes because that ended up actually being 6.5 minute trade by the time that minute closed. And then I went in for re-entry to show you the other way of trading. So that still would have cleared. A little bit annoying how that moves sideways, how we just had doji. Generally we have the move. But yeah, so that wick there is reacted off this one here, just to sort of see, so you can start to understand. It's really important you spend a lot of time looking at charts, like to know how things move and how price moves. But yeah, I think that's probably enough tonight because I've kept you guys for so long. I do apologize, and I stink. I need to have a shower. All right, team. Yeah, again, any questions, feel free to ask. Fridays are my days where I've got gaps. I've only got half an hour gaps, but I've got gaps where I can fit anyone in if you want a little bit more. Now, to sort of just, I guess, go off this, why this is happening coming up, and I think in the biggest opinion was the fact that we didn't have that engulfing candle. So this is essentially being like a fake out. But it doesn't matter. And this is why I was 10. We still would have profited off the second one, following what we've seen. So I think that was, in reality, the reason why we're now seeing the upward move. But also, some win, some you win, some you don't. But look for things like that. Look for high moves, etc. All right, team.
Thanks, mate.
8:15. Queensland time, 9:15, and like I said, I'll try to keep them a bit shorter. Now I've got access to screenshots like Danny, and do some Q&A for you and see if you guys can get those ones right. Someone send the fax machine. Can't even stop sharing. All right, guys, love yous. Take care. Bye-bye.